Hello guys, this is my trading journal for Friday the 20th of November. My name is David and I am also known as the Spread Doctor. Looking at the heat map we've got today, one would be forgiven for thinking that it was another sell-off day in the equity markets today, because there's a lot of red. There's more red than green, and the red seems a bit more prominent on the map. And although most of the equity indices closed lower, they were just moderately lower. They were not down. There's not one index that was down by more than 1%. So the Dow was down about 0.75%. The Nasdaq was down by 0.4%. And the S&P 500 was down by 0.6%. The best performer on the day was a Russell 2000, and it managed to close up by 0.07%. So although the heat map paints a picture of, shall I say, doom and gloom, it looks very red, the market's performance were not that bad. Not that bad in spite of some major headline that hit the markets today just before the market opened, which I'll touch on in a short while. Moving on to the VIX. The VIX was up slightly today. It was up by 2.5% to close at 23.7. And it now appears that the VIX is consolidating. There was a volatility crush just after the US elections. Building up to the US elections, the VIX went as high as 40. And it looks like it has now got to a level where it's just consolidating and not really going much higher. That said, there was some downside protection being bought today by fund managers, and that's what made the VIX go up by 2.5%. There was not an awful lot of it, which I'm surprised by. I would have thought there would be a lot of protection buying based on the headline I'm going to talk about in a minute. And I decided to look at the VIX futures going into next year to see what is being priced into the market. And for the February and March 2021 VIX futures, they close around the 26th level today. And the average from January 2021 to around April 2021 is also coming out at around 26.2. So the market is still pricing in some market volatility right up until the end of Q1 of 2021. And that can only be good news for premium sellers like myself and like you, like us. I mean, if you're into selling premiums and collecting premiums, selling credit spreads, then VIX above 20 and trending higher can only be good news. Moving on to the headline I was talking about. So there now appears to be a spat that has developed or is developing between the US Treasury Department and the Federal Reserve Bank. Earlier this year, when the COVID-19 pandemic, when it broke out, the Treasury Department set up a relief program, and it was like an emergency lending facility program linked to the CARES Act that gave the central bank some additional ammunition to shore up the financial system. And it gave you that ammunition just in case there was a sudden shock to the financial system. For example, if there was a partial lockdown due to a spike in infection rates, the Fed would be able to step in and just shore up the system. Now, that emergency lending program had an end date of December 31st, 2020, which is in a few weeks. I think about 5 weeks away, or something like that. But Wall Street had taken it for granted that this program was going to be extended beyond the 31st of December expiry date. Well, this morning, just before the market opened, I think about an hour or two before the market opened, Mnuchin came out and he said they were going to allow the emergency lending program to expire on the 31st of December this year, i.e. they were not going to extend it like everyone else had expected. Nobody saw that coming. And to put a few things in context, the daily infection rate in the US today is much higher, way much higher than it was earlier this year when this program was launched. So if there was a case for it to be launched in April when the infection rates were low, I would say there is a bigger case for it to be for it to remain open now when the cases are higher. The number of people dying, or number of people who had died in April, is nothing compared to where they are now. And I'm not a fan of conspiracy theories, but in this case there's a scarcity of economic reasons for ending this lending facility program now. And there is an abundance of political reasons for doing so. And here are a few comments I came across after that news broke. The first one is from the chief economist at High Frequency Economics. And this is what he said, and I quote, "Mnuchin's decision to allow the key pandemic program to expire is like stripping lifeboats from the Titanic." End of quote. Here's another one from a CNBC commentator. "I do not think there is a good economic reason or a good public health reason or a social reason to explain why they want to cut these programs at this particular time. So it's got to be politics, hasn't it?" End of quote. And here's one from a hedge fund manager. "It was difficult to find an economic rationale for the decision, with millions of Americans still receiving unemployment benefits and with the regional Fed indicators softening, and with further shutdowns or close downs or lockdowns likely on the horizon. This is an unusual time to withdraw the facility." And if you look at the implications of not renewing this program, the infection rates in the US are rising, and we are heading into a holiday season. You've got Thanksgiving and Christmas very shortly. And we all know that in spite of all the warnings from the medical professionals about staying at home during the holidays and just staying within your immediate family, not traveling, not meeting extended family, not meeting friends, we all know people are going to move around and people are going to mix. And as a result, we know the infection rates are more likely to accelerate than to decline. So come January, when the new administration takes over, there may be a need for a further lockdown or a partial lockdown just to curb the spike that would have accrued over the holiday period. And the Federal Reserve might be required to step in and shore up the financial system, because businesses are going to be shut. Small and medium-sized businesses would need to shut down if there's a partial lockdown, and they might need funding. And it comes across as really odd that, bearing all that in mind, the Treasury decides now is the time to end this facility. And yes, I know the new administration can reinstitute the emergency funding facility program when they come into power. But in order for that facility to come back, it would need to go through Congress. And we all know how slow Congress has been in passing bills over the last 6 months or last few years. And even if the Congress acted really swiftly, there would still be some sort of delay between passing the bill and the Fed being able to lend out that money swiftly. Well, this is the bottom line. The Fed would now have $2.6 trillion with a T. $2.6 trillion less in January than it has now to respond swiftly to blockages in the plumbing of the financial system. And that's the bottom line. So the Fed is going to have $2.6 trillion less than it does now in January. And I think I kind of showed where I'm leaning towards on this one. But I'll leave you to draw your own conclusions as to whether the decision to pull the plug by the Treasury Department was a political decision or an economical one. That said, I am moving on to the trade ideas. Yeah, but bearing that in mind, given all that, the market reaction was a bit muted today. There was no index that was down by more than 1%. The VIX wasn't that high. Gold wasn't that high. Treasuries didn't drop a lot. The yield on the Treasury didn't. I mean, it did drop a little bit. There was some buying of US Treasuries, but I think it was only a few basis points. It wasn't anything massive. So it could be a delayed reaction. That could be why the VIX futures going into early next year are higher, because the impact of this probably wouldn't become apparent until the new administration comes in. But maybe that's why the market is playing let's wait and see and not getting ahead of itself. So moving on to trade ideas. I had no new trade ideas today, but one of my December positions did close out yesterday. And that position would be in ARKK. So this position closed out yesterday and I booked my profit to hit my profit target. And for more details on this position, you can go to the Trade Ideas Alert Forum, or you can click on the link that I'm going to drop below. Now moving on to my open positions, my remaining open positions. I have now got 3 open positions for the December contract, and they are in BABA, MRNA, and PDD. And today being Friday, I'm going to review my P&L on all of them. So the first one I'm going to look at is in BABA. And on this one, I sold the 250, 245 December put spread for a credit of $1.50. Let's see where BABA closed today. So BABA, Alibaba, closed at $270.74 today. It was up about $10.85. It got a bounce today. I'm short the 250 put, so my short put is about $20 out of the money, and no action is required on this one. And let me see what my P&L is on this position. So I'm going to go to my portfolio tab, and BABA, I have an open position of 320. And I've got 5 contracts, so that works out at a positive P&L of $64 per contract on BABA. The second one is in mRNA, Moderna. On this one, I sold the 75.70 put spread for a credit of $1.60. Let's see where mRNA closed today. My short strike is a 75 put. mRNA. So mRNA closed at 97.61, up $4. My short strike on this one is a 75 put, and again this one is also comfortably out of the money, so no action required on this one, same as Alibaba. No action required on Baba, no action required on this one either. Let me look at my P&L on this one. So in mRNA, my P&L works out at $120 per contract. Positive P&L $120. I don't even recall, during the week, I think it was it Monday? Let's see. Yeah, so on Monday, I noticed in the pre-market, so just before the market opened, I think about an hour before the market opened, Moderna came out and said their effective rate for their COVID drug was 94%. And the price of mRNA spiked by 15%. It went as high as $104, I think. And then I sent out this alert that there were indications that mRNA is going to gap up at the open by around 15%. My initial target on the spread when I sold it was to buy back the spread for 55 cents. But in light of the potential gap open, I lowered my profit target to 30 cents. But then what happened was, when the market opened, the rally faded, and even though it traded as high as 104 in the pre-market, in the regular session it never broke above 100, so it just went down. I think it ended up only $1 or $2 on the day, so it was up to about 97. So given that my profit target was initially 55, I then moved it down to 30. Let me see where the mid price for the spread closed today. If I go to my activity tab, and it's mRNA. So mRNA, the mid at the close was 40, which is below my initial profit target. So if I had left here at 55, I would be filled. I would like to close out this position this week. So here's what I'm going to do. I'm going to leave here 30, but by midweek, if the position is still open, I'd be willing to move up my profit target from 30 towards the mid. So I would like to close it out this week, and I'll send out an alert even when I do change my profit target on this one. So if I don't get filled by Tuesday, Wednesday, be on the lookout for an alert. It'll be good to close out this one in particular this week, because my initial profit target of 55 has been hit already. Okay, moving on to the next one, which is PDD. So PDD, I sold the 120-115 put spread for the credit of $1.38. Let me see where PDD closed. So my short strike is a 120 put. PDD closed at 143. It was up about $5. My short 120 put is conveniently out of the money by $23. No action is required on this one. And if I go back to my portfolio tab, my P&L on this one is a positive P&L of $56 per contract. So my P&L here is 280. I sold 5 contracts, and that works out at $56 per contract. And that brings me to the end of my journal today. The main highlight for today is that I may have to move up my target on mRNA. It was 55. I moved it down to 30, and I might have to move it back up during the week. So if I do decide to move it, I'll send out an alert, so please be on the lookout for it. I hope you enjoyed listening to my journal today. You can leave me any comment or questions below, and have a fantastic weekend. Speak to you next week. Goodbye.